Hello, namaskar viewers. I am Sanjeev Pandya welcoming you to this week's edition of the Tax Talk with AJ right here on ITV Gold. The show is brought to you by Sai CPA Services, a professional accounting firm located in the state of New Jersey. Multiple locations. They can assist you in the various tax matters as well as business-related matters such as virtual CEO, CFO, payroll services, bookkeeping services, and for corporate or personal tax matters. Even for IRS tax audit, they can assist you. They can be reached at 908-888-8900 or visit their website, saicpaservices.com. With that note, I'd like to welcome Mr. A.J. Kumar of Sai CPA Services, CPA, MBA, and CVA with Sai CPA Services. Man knows all about CPA and the tax matters and, of course, business matters, and that's why we bring him to share his views and suggestions with all of us in the show. AJ, welcome to the show.
Thank you, Sanjeevji. Thank you for the kind introduction.
Sure, you're very welcome. Now, when it comes to business, business is business. And when you run a business, number one thing that they look into it is a profit. And then besides the profit, one of the most important things to look into it is the deductions. What are the deductions that a business owner can take to help out the business? There are several deductions, and sometimes some owners are not even aware of certain deductions that they can take. So in this episode, AJ is going to give us information that we would be, we would find it very helpful to know all the deductions that that a business person can take for their businesses, right, AJ?
Absolutely, Sanjeevji.
All right. So first, let's start with home office deduction. This is really interesting to have your office inside your home. And how does the home office deduction works?
Absolutely, Sanjeevji. So when it comes to small businesses, there is nothing small about it. It's a 24 hours, 7 days job. As much as you work in your proper office, in your regular office, you always find yourself working after hours, early hours on the weekend. I haven't really seen a single small business where the business owner is not working after office hours on the weekend. You're doing a lot of things, networking events, marketing events, paying bills. There are a lot of things that you do offline, checking emails. So the best part is, if you play it right, a lot of those expenses can be used to pay down some of the profit. So you don't have to pay taxes on the whole profit. So starting with the home office expenses, Sanjeevji, the way it works, as long as you're using your space regularly and exclusively. These are the two keywords here, exclusively and regularly. You cannot be saying, oh, in my bedroom, I have a small table where I have the laptop. Or sometimes I work on my bed. Or sometimes I work on the couch when I'm watching TV. That doesn't work. It has to be an exclusive space, regularly used. Regularly in the sense that I do bill payment every night. Or I see clients every so often. It doesn't have to be every day. It has to be regularly used. In that case, you can calculate the area over there that's exclusively used for home office. Let's say if you live in a house and the square footage of the house is 2,000 square feet in this example, and your home office area that's being used exclusively and regularly is 200 square feet. In this example, 10% of your utility bill, mortgage interest, a lot of those expenses can be claimed as business expense, and then you can reduce your profit and lower your taxes.
All right, very good. That brings a question in my head that when someone has the home office, and let's say it's more than 200 square feet and everything, and when they have lunch together with the client, and the tab of that lunch, would that be deductible?
A great question, and this is very common for people to miss it. So we call it business meals deduction. So if you are going out with a client, in that situation, 50% of your meal is deductible. And the theory is you would have eaten anyway, meaning your meal is not deductible. The expense that you paid for the client's meal is deductible. So when you take one client out, it's 50% deductible. But the question is typically asked, what if I'm taking 10 clients out? How could you be denying 50%? I was just one of the 10 people, one of the 11 people in this example. So in that case, when you're taking a group out, or when you have the office party, or when you have the client reception, a lot of clients are invited. In those cases, the 100% of the meal can be claimed as a business expense. But if you're taking one client out, and how do we know? How would the system know? If you're taking one client out or 10 clients out, depending on the tab, depending on how much you're paying. If you're paying $1 for your coffee, we deny it because you took one coffee for yourself. If you're paying $20, $30 of meal, you took one client out. But what if you pay $500, $1,000 for this place where you had a client reception, annual client reception party? In that case, everything is allowed.
Oh, I see. Okay, very good to know. All right, so that's a home office deduction. Now let's continue to move on. When someone start a business, obviously there is a startup cost and other costs related to it just to get the business and get going. How are those costs are, the expenses rather are deductible?
Well, startup costs are supposed to last for the life of the business. Meaning, let's say you paid somebody $1,000 to start the business. This is just not an expense. This $1,000 creates a value, an asset in the books that you will use as long as you keep the business. If you have a trademark that you needed to create the business, this trademark has the value as long as you keep the business. So we call it as a startup fixed cost. In those costs, we are supposed to amortize it over 15 years. But the exception is up to $5,000 of the fixed business startup cost can be claimed immediately in the year of business startup. If you spent a lot of attorney fees for the royalty, for the trademark, for the business startup, only first 5,000 is deductible immediately, can be expensed immediately. The remaining amount has to be capitalized and amortized over 15 years. What I'm saying is, in these big words, so if you spend $20,000 on the business expense, startup, 5,000 you claim immediately. The remaining 15,000 you claim 1,000 every year for next 15 years. You don't claim the whole 15,000, the leftover 15,000 immediately.
What if business doesn't last that long?
If the business does not last that long, so in the year when you close the business, whatever the leftover unused capital asset is, that can be written off immediately. Let's say after 7 years the business is not doing well and you sort of close the business, the remaining $8,000 in this example can be claimed as an expense, as a write-off immediately in the final year.
Okay. Having your own business, obviously, it also comes with traveling a lot, meeting clients, and doing whatever is necessary for the business. So that way, mileage and vehicle expense also comes in the picture. How does that work? Let's break down the mileage versus the vehicle.
Absolutely, Sanjeevji. So the best part or the worst part is a lot of people buy the car under their own name. Because if they try to buy the car under the business name, they have to have a corp code from the state. The insurance company will have the higher price for the insurance. So a lot of people, just for the simplicity, just for keeping it reasonable, keeping it cheaper, a lot of people will end up buying the vehicle under their own name. So when the business does not own the vehicle, you cannot claim the depreciation. People talk about Section 179 depreciation. People talk about having the gross vehicle weight rating of over 6,000 pounds, where you can push additional bonus depreciation. But in all those cases, when we talk about that the vehicle needs to be more than 6,000 pounds, when we talk about Section 179 deduction, the title of the vehicle must be under the business name. What if the title of the vehicle is not under the business name? Then what can you do? In those cases, you can claim the mileage, you can claim the regular repair and maintenance expense. And it's not that complicated. You know where you live, you know where your business is located. You have to go every day, you have to come back every day. That's the simplest thing. And there is no log that you need to maintain. I go there 5 days a week. My office is 10 miles, so I have 100 miles every week. You can have the client meetings, you can track these things. As much as 70 cents per mile you can deduct from your business profit as these travel expenses, as these mile expenses. If you have more expenses, let's say, well, you have an old car, the repair and maintenance can be pushed into business expenses as well. But you have to be careful. You can do either this or that. You can't be coupling or duplicating these expenses.
All right, when it comes to businesses, is it a truth or myth that if you have a business it's okay, or it's rather good, or it's maybe worthwhile to have a vehicle under business name, and that to have that vehicle leased, so that way you can deduct the monthly payment. Is that truth or myth?
Well, it's true. The statement that you made is a true statement that you can have the lease of the vehicle under the business name. In that case, assuming you have another vehicle for your personal use and this vehicle is mainly used for business purpose only, you have the right to claim the lease expenses as the business expenses. It's easier, cheaper, only because when you try to buy it, not only you're trying to add an asset to the books, but now you have to have the title under the business name, where you have the higher insurance, you have to get the corp code. So there are a lot of formalities. So when it comes to business, leasing becomes simpler, easier, cheaper in many sense. The other side of the coin, if you think about it, let's say you want to get a vehicle that's $70,000. You only pay $5,000 down payment, and now you have this title of this vehicle under the business name. You can claim $70,000 of depreciation. You can claim almost 85% of it. You only paid $5,000 in this example. You owe $65,000 as a liability, which you are paying on a monthly payment. But on your asset, you will still show $70,000. When we compute the depreciation is computed to the whole $70,000. So the situation you are creating is, I paid $5,000, but my expense, my depreciation is $65,000. So it can be, you have to look at situation by situation. You have to look at it a case by case basis. When people talk about leasing for the business, it's mainly because it's easier, simpler, cleaner that way.
But if it's a leasing, then you can't claim $65,000 in deduction, right? Because lease could be 3 years or 5 years.
No,
and
leasing, the depreciation only comes in picture when you own.
Or when you own the vehicle.
The asset under the business name, not under your name.
Okay.
First, you have to own it, not lease. Second, the asset has to be under the business name, not under your personal name.
Okay. All right. Good. Thank you so much for clarifying that matter. We're going to take a short break. When we come back, viewers, we're going to talk about health insurance premiums. We're going to talk about education cost and more as part of business deductions in this episode. It's all coming up. Stay with us. Welcome back to the second half of the Tax Talk with AJ. The show is brought to you by Sai CPA Services, a full-fledged tax accounting firm located in the state of New Jersey, and with their knowledgeable, on-hand, experienced CPAs can instantly help you with any tax matter. Of course, you can give them a call, set up an appointment. Zoom call is also possible. FaceTime is also possible to get your tax matter resolved. So for your personal corporate taxes, if you're confused, then do not need to worry about it. Give Science CPA Service a call, 908-888-8900. That's a 908-888-8900. They believe in doing taxes right, and that's why they have the highest satisfaction rate among their clients, not only in New Jersey, but across USA. So remember Science CPA Services for any tax matter, as well as any IRS tax audit matter, just in case if you are in a tax audit situation, they can also help you out. With that note, let's continue our conversation in this episode, which is all about business expenses deduction. We touched upon several things in the first half, and now we're going to start with health insurance premium. Once a business owner, obviously one big responsibility is to have a health insurance. How are the health insurance premiums are deductible for the business owner?
Absolutely, Sanjeevji. So health insurance is not cheap. For a typical family, health insurance could be thousands of dollars, couple of $1,000 a month. So knowing that the difference between LLC and S Corp is extremely important. In LLC, the health insurance expenses are deductible on Schedule A immediately. On S Corp, you can claim the healthcare expenses as deductible expenses on the books, but if you own more than 2% of the company, they need to be shown as taxable benefit on the W-2. So just be careful when it comes to the health insurance. It's an added perk. You can push the health insurance expenses, large expenses through your business, especially if your business is profitable. The problem is a lot of people have the situation where they just created a shell company just to show, or the company has not started making any money, and then they try to put $16,000 of health insurance expenses even when the business is not making $15,000. That's what people get audited for. Meaning, if you did not own the business, would you do it for somebody else? And if you won't, then it's not an arm length transaction. It's not a fair transaction. So just be careful at how much expense you're pushing in your business.
Okay, very well. Now let's go to educational cost. A business owner sometimes needs to get some kind of educational or some kind of training courses in order to help out their own business, which is owned by them. Are they deductible, and how are they
Absolutely,
deductible?
Sanjay. You said it very well. So, especially in the professional service business, for CPA, for doctors, for attorneys, we have to take certain continuing education courses every year. Realtors, they have to take N number of credits every year. So all those expenses are claimable business expenses. I mean, you wouldn't be going through those trainings if you did not have this business. On the other hand, if you own a franchisor has certain regulations that you have to do certain trainings every year, every so often. All those expenses, not just for you, for your employees as well, are 100% claimable business expenses.
Okay, interesting. That's good to know. Now let's move on to retirement contributions. Obviously, business owners someday would like to retire. They may have some exit strategy in the plan. So, if they really want to put money away for their own retirement, how would that affect their own tax return?
Absolutely, Sanjeevji. So when you have a small business, nobody else is paying for your 401k. You don't get the 401k through your employer. You are the employer in this case. You have to be concerned about your retirement planning as well. So a small business plan has a lot of options. You can have, of course, the IRAs that are given to everybody, individual retirement account, which could be traditional and or Roth. A small business owner also has options with 401k, solo 401k, SEP, or you can have your own 401k plan mixed and matched with qualified versus non-qualified plan. You can have defined benefit plan. You can have defined contribution plan. So there are a lot of options when it comes to a small business. You have to see, depending on how many employees you have, how much revenue you have, how big is your business, how much profit you have, as what makes sense for your business. Please do not assume that if you're not making profit, you cannot contribute to the retirement plan. It's not true, especially for S corporation, irrespective of the fact how much profit you are making in C corporation, especially irrespective of showing losses, you still have the option to contribute into certain plans. Say, for example, just for your own benefit to start the retirement. So just be careful. There are a lot of rules and regulations around it, but there are a lot of options for a small business owner.
All right, good to know. And that's how viewers, we say that, for all these details, you can always contact Science CPA Services. Let's move on to the marketing and advertising expense, which is extremely important for a business owner.
100%, Sanjeev. You said it rightly. It doesn't matter how good you are. If people don't know who you are, what you do, where you are, nobody's coming to you. That's where the marketing and advertising kicks in. That's where you have to go out of your way to tell everybody what you do, why are you different than everybody else, and that takes a lot of money. I mean, the radio ad, the TV ad, the newspaper ad, search engine optimization, website management. There are a lot of ways you can do social media, these advertising and marketing. All those expenses that you have related to advertising, marketing, all these social media, search engine optimization are claimable, deductible business expenses for your business.
Okay, very good to know. Now let's touch upon a very important thing, and obviously our viewers, and if they are business owners, they will find it very interesting. Qualified business income.
Absolutely.
QBI, what is
QBI.
it and how does that work?
It's surprising, and it breaks my heart when I see the tax returns where people forgot to claim the QBI deduction. The concept at a high level is that the first 20% of your business profit is not taxable. So how silly does it sound that you make $100 and you are supposed to pay tax on $80, but you are paying tax on $100?
Wow.
So you have to know this is an extremely important benefit that came under 2017 Tax Cut and Job Act that's expected to expire in 2025. Now we have the new bill coming up where this particular law will be made permanent. The idea here is for a small business. And a small business is defined for, depending on what type of business it is. If you are making less than $400,000, husband, wife, married, filing jointly. If you are making more than $400,000, then you have to be passing through some other test. Is it personal service business? Is it a specified service trader business? There are other criterias if you are making more than certain amount of money, $400,000 for this year. But if you are making less than $400,000 in your small business, this is a no-brainer. You make sure that you talk to your accountant, make sure you check that you should not be paying taxes on the 100% of the profit. You should, first 20% of the profit should be tax-free for you.
Is it for same LLC,
It's
S
for all
corporation, C
businesses,
corporation?
all flow-through businesses, proprietorship, partnership, LLC, S corp, not for C corp though.
Okay. Or
you
has
have
it
to-
always been there, or this was?
It's
added?
been there for few years. A lot of people, the computation is complicated. The computation is a little bit difficult, especially if you have more than certain amount of net profit, certain amount of income, especially if you have more than $400,000, it gets hairy. That's why a lot of people don't know how to do it, especially if you are doing your own taxes. A lot of people end up missing it.
Okay. All right. Interesting. Good to know about qualified business income. Anyway, viewers, if you have watched the entire show and if you need to get details on any one of the business expenses or the qualified business income, do contact Science CPA Services. Have them look into your business tax return and they will advise you and guide you in the right direction, because their motto is to do your taxes right, to have your taxes done right. Refund, not refund, to pay, not pay, that's a different thing. But do your taxes right, and whatever deductions that you are eligible for, you may not know it, but experienced CPAs would know it, and Science CPA Services fits in that category because they're experienced, they're knowledgeable, and they have a huge list of clientele from the different walk of industry. Each and every single industry's client that they prepare their tax returns, so they know it. Give them a call, 908-888-8900 or sciencecpaservices.com. But not only for business owners, for personal tax returns also, in case if you filed an extension and need more clarity, maybe you're not satisfied from other source that they have told you whatever it is, and maybe you want to clarify something more. Science CPA Services can definitely help you in that initial meeting. Set up a meeting, give them a call, and you take it from there, and you will be definitely pleased. Science CPA Services, once again, 908-888-8900. AJ, thank you so very much for your time. Until we meet again, same place, same time, I am Sanjeev Pandya, wishing you all happy and tax-free summer days ahead. So long.
Thank you.